Welcome everyone for a new Taxx.lu Webinar Series about how to save on taxes. So we scheduled 4 different webinars this week. The first one, that's the one for today, where we are talking more globally about the tax optimization. Then tomorrow we will talk about preparing your pension and save on taxes. In 2 days, we will talk about different possibilities of protecting your family and save also on taxes. And finally, we will talk about the advantages of a home savings plan. Let me introduce myself quickly. I'm Patrick Malje. I'm one of the founders of Taxx.lu, a website that is online since 2018 and that allows everyone to do their tax return on their own online in a very easy way. All along of the webinar, you will see on the bottom left of your screen a QR code that you can scan in order to book a call with one of our experts to talk about your potential tax savings. So a tax return in Luxembourg is not always mandatory, but filing one can help you save on taxes. So you have to know that nearly half of all the taxpayers do not file a tax return and therefore will not receive a refund. We will see today that you have different types of expenses that you can deduct on your tax return that will allow you to reduce your tax burden here in Luxembourg. So what is tax optimization? Basically, tax optimization means that you can deduct different expenses on your tax return, allowing you to save taxes, and the amount of taxes you can save depend on your revenues and also on your tax class. So as I mentioned, on one hand, in order to find out how much taxes you have to pay, you have your taxable income, and on the other hand, you have different tax classes. So taxable income, basically, how is it determined? But on one hand, you have all your different incomes. So for example, your salary, then you have different special expenses. We will see today what all this is about. And then you will have a taxable income. From this taxable income, there are also allowances that will be deducted in order to determine the adjusted taxable income. And on that amount, the taxes you have to pay are calculated. So if you want to lower down your tax burden, you have basically 3 options. First one, lower down your income. Basically lower down your salary, what is not what you want probably. Then you can increase your special expenses. We will see this a little bit more in detail today. Or you can also increase different allowances. We will talk about it as well in a minute. So on one hand, you have taxable income. On the other hand, the tax class. Tax classes in Luxembourg, we have 3 of them. To make it easy, tax class 1, it's for singles. Tax class 1A, it's for single with kids. And tax class 2 is for married couples or also people in a registered partnership. But there you have to know that in order to ask for tax class 2 and do your tax return together, you have to be in this partnership from the 1st of January to the 31st of December of the fiscal year. So basically, if you are getting taxed, so in a partnership today, this year you cannot yet do your tax return together, but it's only starting from next year that you can do so, and then you will be assigned to tax class 2 on your tax return. So on one hand, taxable income, on the other hand, tax class. The tax class side, you cannot do a lot to optimize your tax situation. However, you have to work, you can work on the taxable income. Let's start with the basics. So how is determined my tax rate? Basically, in Luxembourg, we have a progressive tax rate system going from 0% taxes to 42%. And on top of that, there will be an unemployment fund surcharge. So basically, it's 7% if your taxable income is, as a single, is less than 150,000. Or less than 300,000 if you're tax class 2, and above it will be 9% for both types of tax classes. So an example, a single with 50K taxable income, the last euros he's earning will be taxed at 39% plus the unemployment fund. So in total, the last euros you are earning with such an income, it's 41.73%. So let's have a look at those different tax brackets. As mentioned, we have a progressive tax system in Luxembourg, which means that for this single earning 50K of adjusted taxable income, the first 11,265 euros will not be taxed at all. The next euros this thing is earning, so from 11,265 to 13,137 will be taxed at 8%, the next bracket at 9%, and so on. And the last euros this person is earning, so above 45,897 euros, each euro will be taxed at 39%. And on top of that, there will be the unemployment fund of 7%. So at the end, this person will have to pay 9,743 euros in taxes. So here the taxable income is the most important factor that will decide how much taxes you have to pay. So what amount of taxes could you save with tax optimization? Let's start with an example. Going back to our example with a single earning 50K per year, he would have to pay 9,743 euros in taxes. If that person is deducting 4,000 euros on his tax return, then the adjusted taxable income will only be 46,000 euros. So it would be taxed on those 46,000 euros. So if you're having a look again to this table, we can see that the only thing that changes is the last line. So here, the 39% are only applied on the 103 euros from 45,897 to 46,000. So and at the end, this person would have to pay 8,074 euros in taxes. So before tax optimization, without deducting those 4,000 euros on the tax return, this person would have to pay 9,743 euros in taxes. After deducting 4,000 euros on the tax return, the total amount of taxes he would have to pay would be 8,074 euros. So at the end, the tax gain is 1,669 euros, thanks to the deduction of 4,000 euros. So what are your options to optimize your tax situation? Basically, in Luxembourg, we have different categories of deductions. So at first, you have special expenses. You have, for example, interest expenses on loans. You have insurance premiums. You have private pension plan premiums, or you have also contributions to a home savings plan. On the other hand, you have as well different allowances. The most frequent one is cost of childcare and domestic help, meaning, for example, the expenses you have for the crèche for your kids, or also a cleaning company that is coming to your home to clean your home is also deductible. Then you have different what is called extraordinary expenses. They are extraordinary, of course. This could be, for example, expenses you have with a lawyer because you had some divorce trouble or whatever. In this category, you need to have expenses that will exceed a certain minimum. So it really depends on your situation. And now there's no more tax reliefs for car and bicycles. This ended 2 years ago. How can you deduct interest and insurance premiums? So basically what you need to know is that for every deduction, there are maximum deductible limits. And those maximum deductible limits for interest expenses and insurance premiums depend on the number of persons in your household. So basically the maximum deductible limit is 672 euros per family member in your household. So for example, if you are a couple with 2 kids, then you can deduct here a maximum of 2,688 euros. On one hand, you have interest expenses, for example, on consumer loans. If you have a loan for a car, for example, those interests are deductible in this category, but also credit card interests or overdraft interests on your bank account. On the other hand, you have different insurance premiums that you can deduct. The most common one is the civil liability insurance, for example, for your car. So that's the insurance that you, by law, need to have to register a car in Luxembourg. If you have an insurance that covers also material damage on your car, that one is not deductible. Then you have different life insurances that you can deduct, but also private healthcare insurances that you can deduct on the tax suite. One example of an insurance, of a life insurance that is deductible from our partner Lalux, called Lalux Education. Here the goal of that insurance is basically to set up a savings for your kids when they're going for university, for example. So there you could invest, for example, 100 euros per month over 10 years. And in that case, your child would receive, after 10 years, each quarter, for 5 years, an amount of minimum 438 euros. So in total, over 5 years, that person, the kids, your child would receive 8,760 euros. In case of life, so in case of life of the parents after 10 years, if one of the parents or two parents would die before the end of the contract, then your child would receive a lump sum. For example, if one parent would die in a car accident, then the child would receive 52,513 euros. If two parents would die, then the child would receive 105,025 euros. So what's your tax gain? If we are looking at an example for a couple with a taxable income of 100K, and if that couple would sign up for this life insurance and invest 100 euros per month over 10 years, then the total premiums over 10 years will equal 12K. The tax gain, so the taxes you could save thanks to that deduction, is 5,007 euros over those 10 years. So at the end, the insurance only costs 6,993 euros. And the minimum your kid would receive would be 8,760 euros. So on one hand, you can put up some savings for your kid for university, and on the other hand, the kid would have some coverage if one or two parents would die. Then the private health insurance, there you have DKV Luxembourg with their product Easy Health. So basically a private health insurance covers quite a lot that CNS, so the public healthcare system, is not covering. For example, you have doctor visits, you have hospital stays, first class rooms, you have glasses and contact lenses that will be reimbursed, you have dental care, kinesiotherapy, osteopathy, and much more. So easiest would be to ask for a quote for your family, and then we can also provide a detailed list of coverages. If we are taking an example of a single 30 years old with a taxable income of 50,000 euros, but the annual premium for his Easy Health insurance would be around 710 euros. Thanks to the deduction, the tax return, tax savings would be 280 euros. So at the end, this insurance would only cost 430 euros, meaning 36 euros per month. So an outstanding balance insurance, it's quite a specific insurance. It covers the mortgage in case of death or if you can no longer work. So basically, this insurance would reimburse your mortgage if something would happen to you. There, normally you have two options to pay this insurance. You can opt for an annual premium or monthly premium, or you can pay all in once with a single premium at the beginning of the contract. If you are opting for an annual premium, the premiums you are paying will be considered together with the other insurances that you can deduct each year, meaning 672 euros per family member. And very quickly, if, for example, you have, I don't know, 2 cars in your family and a private health insurance, you will be already over the maximum deductible limit. So from a tax optimization point of view, an annual premium won't make any sense. if you can, you should go for single premium, because if you are paying this insurance in one shot, then the maximum deductions will increase. They are 6,000 euros per adult in your household, plus 1,200 euros per child, plus 8% per year exceeding 30 years. So, for example, a couple, father 40, mother 38, with 2 kids, they could deduct here a maximum of 24,960 euros. So what does it mean? But basically it means that without deducting this type of insurance, this couple would have to pay with an adjusted taxable income of 120k. This couple would have to pay 27,833 euros. But by deducting this single premium, the taxes due would only be 17,401 euro. So at the end, thanks to the deduction of this insurance on your tax return, you could save 10,432 euros in taxes for the year you are subscribing to this outstanding balance insurance. So if you are paying 24,960 euros for this outstanding balance insurance, thanks to the tax gain of 10,432 euros, the net price for that insurance at the end would only be 14,528 euros. Also good to know, single premiums can be deducted every 5 years, meaning that if you bought your home 6 years ago and you already contracted an outstanding balance insurance at that time, then you could today, if you are, for example, have construction work in your house, you could sign up for a new outstanding balance insurance and get again this higher maximum deductible limits for those insurances. We have a webinar in 2 days going more into details about insurances. It's called Protect Your Family and Save on Taxes. Just register and then you can have a look more in detail about the different options you have. Another option is the private pension plan. For a private pension plan, you can deduct a maximum of 3,200 euros per adult person. So kids are not involved here in the calculation of the maximum deductible limit. So a couple with 2 kids could deduct 2 times 3,200 equals 6,400 per year, and they could save each year up to 2,670 euros. Those private pension plans have a maturity at earliest at the age of 60. So at the earliest at the age of 60, you can access that money, and after a minimum of 10 years, meaning that if you are signing up for such a private pension plan at age 55, you can earliest access that money at age 65. If you are subscribing at age 30, then you can access, of course, at age 60 for this money. You have 2 options. One is called performance. Here your monthly investments will be invested on the stock market through different investment funds you can choose from. And you have the option security, where your savings are guaranteed. So you know already today, by signing up for this private pension plan option, how much you would get out of the contract at the age of 60. At Lalux, this product is called Easy Life Pension. 2 examples. For example, if you would invest each month 100 euros for 25 years, then after 25 years, you will receive more or less 60k out of the contract, and your total tax savings over those 25 years would equal 12,510 euros. If you are investing 266 euros per month, then your capital after 25 years will be more or less 152k, and your total tax savings over 25 years would be 33,359 years. The capital you are getting at age 60 will also be taxed, but only at half of your average tax rate, meaning for a couple with a taxable income of 100k, that they would have to pay more or less 15% on the capital they are getting at the end of the contract. Tomorrow we have a webinar just about the private pension plan with a lot of examples. Just register for that webinar and you will learn a lot more. Then a home savings plan. What is a home savings plan? Basically, a home savings plan, it's you could consider it a little bit like a savings account. A savings account where you are putting money on, and after 10 years you can access that money, and at that moment you have to use it for your home. So you have to use it for or an acquisition, or construction or renovation, or you could also use it for to pay back on your mortgage if in 10 years you have a mortgage running. Here, the maximum deductible limit, it's 672 euros per family member living in the household. And if one of the parents is younger than 41 years, that amount will be doubled. Meaning that a father with 40 years, a mother 38, and two kids, they could deduct a maximum of 5,376 euros in taxes. And they could save, with a taxable income of 100K, they could save 2,243 euros in taxes each year. Our last webinar of this series will be about the home savings plan with a lot more examples. So what products would be best for you and how much taxes you could save? But this really depends on your individual situation. So basically it depends on the family situation. Are you married? Do you have kids? It depends on your revenue, and it depends also on your age. So if you want to have a very clear view about what is possible, you can get in touch with us, just book a call and we can discuss this on the phone. Or when you're doing your tax return on Taxx.lu, at the end of the process, you after completing your tax return, our system will automatically show you your potential tax savings. So basically, the system will do an analysis of your situation, will check what are the deductions you already have and what are your maximum deductible limits. And the system will then show you very clearly how much taxes you could save with the different options you have. Then you can sign up online for those products, or you can just book a call with one of our experts. And normally these calls take like 10 minutes, 15 minutes. We are going through different options. And if interested, we can prepare you contracts with our partners, Lalux or Wüstenrot. And for this, we just need a picture of your passport. So if you have any questions, just get back to us by email on help@taxx.lu or book a call by scanning this QR code. I hope this was helpful, and I wish you a very nice day. Thank you.